Okay, now which banks in the world pay the highest interest rates both in USD and local currency? And is it a good idea to actually go around the world, put your money in the highest rate, banks in the world? So first of all, let's talk about local currency versus USD. Now, when it comes to local currency, there's countless examples of countries that will pay a hell of a lot of money in local currency, whether that's Argentina, whether that's various countries in Africa, even South Africa, whether that's even one or two places in emerging Europe, like Georgia, whether that's Cambodia. However, very few countries pay very high money to depositors in USD terms. But examples of countries that do that are the likes of Cambodia and Georgia that pay 5 or 6% sometimes in USD terms. However, I would make the following points to you. Now, number one, if it was such a good idea, right, why isn't all the great investors in the world, Russians put their money into banks in Georgia and Cambodia? And number two, of course, the banks are not doing it for free. They're using that money to invest in more profitable projects. And number three, the long-term rates of return in markets have been much higher than that, but you have to accept some volatility. However, of course, putting your money in an emerging market bank is not without its risks, right? Any objective person can say that, look, putting your money into something like the US S&P or other stock markets for decades, which is, let's face it, a well-diversified index. Something like the US S&P has sectors as varied as technology to healthcare, to pharmaceuticals, to medical devices, to even some things like, energy. It's also diversified in terms of, the countries that these companies are selling into, like Apple, Amazon. All these companies are selling worldwide. It's not just based on the US. Any objective person can say, if you just hold on to the US S&P index or the MSCI World for decade after decade, that's much lower risk than having your money in the bank in Georgia or Cambodia. Don't get me wrong, it's more volatile, but so what? So always remember, banking is something just for emergency liquid savings. So if you're in Cambodia or Georgia, having a bit of money in the bank is fine. Likewise, if you've got a little bit of liquid cash and you want a bank account in some of these countries, that's fine. But moving, say, 100 grand, 200 grand to countries that have high interest rates is never a good idea. And remember, never confuse volatility and stability. And it's a mistake people make all the time, even with investing. For example, I'll give you just one perfect story or example to illustrate this. In the last 25 years, which index has performed the best in the US? Well, it's the NASDAQ. The NASDAQ has outperformed the S&P, the Dow Jones, and so on. However, the NASDAQ has been the most volatile index, right? It's done 12 or 13% per year consistently now for about 25 years. But you know what? It fell 76% after .com, and it fell more in 2008, 2009 compared to the other indexes. But it's done better if you just held it for the long term. So never be afraid of long-term investing, and never think putting money in the bank is safe. Just look at Lebanon now or Cyprus in 2013, where depositors didn't get their money. At least with an investment, if your money is separate to the platform, your money can't be used by the liquidators to pay off debts. In comparison, with banks, what they do is they use your money, they give it to mortgage holders, they give it to businesses. So the whole business model of a bank is based on debt. There's nothing wrong with that, by the way, as long as it doesn't get out of control. But if it does get out of control, your money can actually be used to pay off liquidators and debtors, right? So never think it's always as simple, when it comes to risk, as saying, well, my money's in the bank, so it's safe. It's not quite simple like that.